Hello traders, welcome to my new video on FreeFX, my channel for free education in Forex. Please bear in mind everything I say and show you here is purely for education and my own view on the markets, not any trading advice. That's my disclaimer. So I'd like to start the conversation today, which is entirely dedicated to the Bank of England rate decision, which is coming up in less than half an hour. Why is this of particular interest to UK traders or pound traders? It's because, well, it affects life generally, mortgage rates and bank account interest rates, anything like that, the cost of borrowing and the cost of not increasing one's funds kept in banks and obviously other investments. So particularly important also for pound traders worldwide and its effect on their own investments in the sterling area. So I'd like to start with the spreadsheet that we have in front of us. This is the taken from the Bank of England's website, so first-hand information. And as far as I know, it's very useful because it's accurate, and two, it shows us the vote since 1997 to the present date. So obviously what this shows us is two things. You've got the asset purchase, and you can see that in 2015, the last few meetings, it's been kept the same in terms of the rate, 375 billion. So this has sort of been kept the same. What I'm interested in showing you, however, is that only one member, McCafferty, in the last two meetings has proposed an increase in the rate by a quarter of a percentage point, so 0.25%. And prior to that, it was also Martin Wheel back to December 2014, so 10 months ago. So you can see that really there hasn't been a lot of increase in terms of the vote. 8-1, etc. So now we have the background to today's rate decision in terms of the voting. Obviously, looking at this article here by if I can find it again, so many websites open at the moment. Okay, well, today's article by Lisa Buchanan on International Business News was that, if I can find it again, basically we're looking at the rate increase being put off, not particularly forthcoming today, but anyway. So this is the article I was going to show you. There we go. This is the article by Elsa Buchanan, I beg your pardon, and it's saying really that pundits and the here the yes, the Bank of England may decide to wait on the Federal Reserve to move, and the Bank of America Merrill Lynch told investors the Fed's expected delay had put back the forecasts for the Bank of England. So we have it there, black and white. Also, there's been this week the IMF, Christine Lagarde, told the markets that press that the forecast for economic growth worldwide has been downgraded. So this obviously has an impact on America as well. So now we have this background. Elsa Buchanan was saying as well here that the rate rise is now pushed to 2016. Funnily enough, in 2013, October, this article published, I pulled it out from the Telegraph, saying that the Royal Bank of Scotland, for example, was saying the Monetary Policy Commission would possibly take the interest rate forward to 2016 first quarter. That was in 2013. Funny how things seem to converge. In 2013, the speculation when Mark Carney came to the Bank of England as governor from the Bank of Canada, the speculation was that the rate would be increased, and the speculation started in 2013. And sure enough, if we have the monthly chart here, we can see that we had exactly this move. Okay, 2013. July, okay, Mark Carney into office, huge doji. Next month, look at this. Okay, so the markets were moving before the Bank of England did. And Mark Carney started talking about the unemployment rate as a key driver for the Bank of England's own rate decision. Possibly for forward guidance, he put forward the idea that the unemployment rate would be vital in this. And so we had the entire move about the Bank of England having the possibility of sort of a push in that direction. However, if we had the see if we can find the actual chart here. This is the unemployment rate in the United Kingdom. This chart is from Trading Economics. I'm going to show you that as candles. Okay, and so you can find this possibly. Let's sign as a line. That's better. Okay, so this is the now this is 2013. Okay, we're just under 8%. And now we are at 5.5, which is roughly where we were in 2007 before the great financial crisis. So when we came to go back to the chart here, when we came to July 2014, okay, we were at the top of the pounds move to 1.72 pound dollar, and so 2014, okay, the 2014 the unemployment rate was coming down to 7%. So and then we started coming down to below 7%, but the Bank of England had different ideas. So the markets really realized that this wasn't going to happen, and it really punished the pound. You can see the entire move was retraced completely. Not only that, but what took a year to build up took only 6 months to undo, more or less. Okay, so now we're in this area of chop, and I said it time and again, we are in a sort of cycle. So if I made this a little bit bigger, you can see that we have a cycle of 7 years, and I've marked these red lines to show you that 7-year move. And if I extend that, you can see quite clearly how this cycle operates. Now that's our levels on the chart. These are 7-year cycles, 1, 2, 3, and we're basically back to the levels that we were at before the great financial crisis, in fact in the 90s. Okay, so this is 96, 94, 7 years, and 6. So this is really quite important, because if we come to the bottom of this range again after 7 years, you can see what happens here. We break below it, but then there's this massive rise. So this could actually happen, and the pound's going up, okay? And replicating this would be obviously a great opportunity for anybody who's bullish the pound. And we have different pound pairs, of course. We've got to take into account that, for example, the pound yen responds particularly well to risk trends, and the Japanese yen. The Bank of Japan just last session really said that they're not intending on expanding on their quantitative easing. So this is really news. That means the carry trade on the yen fueled by the Bank of Japan monetary policy is not really going to be worth the sentiment upwards. So the fact that basically the yen crosses may collapse has much more of a strong influence on something like the pound yen that the pound's increase would, because it's fighting two forces. So unless the Bank of England could surprise the markets and go for a surprise rate rise, then this really, today's rate decision, which is expected to be a status quo, won't really have an effect on this. In fact, it probably won't be able to break to new highs, or even to break down. So this is really where we're at with the pound yen. The pound dollar, I've shown you the pound Kiwi and the euro pound. So I'll show you the euro pound, and the euro pound is an interesting pair for me because it has a lot of implications, obviously tied to the euro's weakness. Fundamentally, the pound is stronger than the euro in terms of rate expectations, and the long-term chart is a descending kind of trend. But of course, we have this, and if I wanted to show you with trend lines, we have this, okay, trend line. And quite simply put, we are at the bottom of it and we bounce back. But this bounce really is not being motivated by any change in sentiment in a euro, and more to the point, I think this is not likely to continue. As others have said, it's really just a relief move for the pound, sorry, for the euro, motivated by the relief move in the euro US dollar. As you can see from my other chart here, that's the euro US dollar, where I've got these trend lines. And yes, we've bounced back, but we've made very little progress. And as you can see from the volume data here, I may have put a line through here. The volume has been decreasing I don't really particularly see a strong move. And this big candle here, which was on Black Monday, so-called, which wasn't the Black Monday of the 80s, is really the Chinese crash. A big candle here, over 10 billion units in real volume, hasn't really pushed the pound much. It went up to a little bit higher, not even a full candle, and then it just collapsed back. So we've not really made any progress. This tells me that if the Euro USD is not progressing as it should, then the euro strength in the euro pound is not coming from the euro dollar. It's just a relief move, possibly waiting on the Bank of England rate decision. Now, depending on how you draw your lines, even if you drill like this, you can see that we've not really come below this line, kind of survived above it, but we did make a little break. So it's indicative that we are trying to push below this. Now, the big line here is the 0.70 mark. This is the area. The 0.70 is where we basically stalled here. If we can break below 0.70, we'll be going back to these levels here. Okay, and these lows in the early 2000s and late 90s. So the pound here has obviously the upper hand. If the pound could push this below, it would easily possibly break, but it does need that conviction to really go through it. Now I'm going to stop there, and just to show you that this is the FTSE 100. The FTSE 100, like the S&P 500, has made a recovery, but overall the trend has been down from the sort of March, April 2015, and so this big collapse here has obviously made a lot of dents into portfolios for the FTSE 100. And we're in a 7-year cycle with the FTSE 100 as well, so we know that this is really a good time, October, for a big sell-off. And we're sort of watching that. As you can see, the 7-year cycle, there's 1, 2, and we're at the 3rd cycle. This is taking a lot more. It's a different scenario, different market conditions. But anyway, something to bear in mind. And the pound rising is negative, the FTSE 100. So the two have mirror relationships, just like for the, if I can show you here somewhere, if I can find it. Okay, maybe not. Here we go. These two charts put side by side. Basically, the 10-year government bonds move just like the pound. So you can see that the pound has been rising in the last couple of sessions, and the bond yields have done the same. Opposite relationship to the gilts, which move in a mirror version, the purple line you can see. So these charts, again, all help to build a picture of where we're at. But really, the Monetary Policy Commission has failed to move significantly, so we're not expecting a surprise move today. I'm just going to pause there, and I'll resume after the rate decision, which will be in just over 10 minutes. Hello traders, just resuming from where we left off. This is the 5-minute candles here in front of us. You can see on the pound US dollar, sorry, this is a pound Kiwi, I beg your pardon. This is the pound Kiwi. This is the candle forming here, just where I am with the mouse. And so just to make it really obvious, I'm going to add a little circle around this. Okay, so that's where we're at. So what is the Bank of England rate decision? Well, let's find out, shall we? Because at the moment, I don't actually know. I'm just as green as you about what's happening. So this is the candle where we're at. The candle is fluctuating, obviously, as it always does when news are released. I'm going to go to our friend, the internet, to find out what has happened in the meantime. So on FreeFX real-time newsfeed, we should get the information that we're after. And let's see what it says. So Bank of England, rate decision, here we go. Bank of England, same asset purchase, and rate decision has been left unchanged. Okay, so half a percentage, 0.5, same. Okay, so that's basically where we're at. So we can get rid of the this window and concentrate on the price. Only a few, less than a minute left on my video. So just to say, you can see the reaction here obviously is bearish. I expect that to take shape as time goes. I'm going to pause just for a second there and wait a few seconds. Okay, and resuming, if you can see the pound USD, the cable, big reaction here from 1.5350. We're now at 1.5320. It's not such a big reaction really, but certainly bearish. So I'll just pause again to see what happens. Okay, here's the pound yen. You can see a negative reaction as well. And finally, the euro pound, obviously bullish. FTSE 100 doesn't really know how to react. This is 5-minute as well. Okay, my time is up on the video just to see. This is the pound US dollar, the bearish reaction continues. So that's the end of our video. Enjoy and see you soon.